Hi, good morning. Jason Sen from daytradeideas.com. We looked at the Forex markets yesterday, and those levels are still relevant for today. They're quite big levels, support levels that we're looking to buy into euro, cable, pound versus dollar, and also dollar yen. We're going to have a look at some commodities this morning. Gold was one we were trading yesterday, didn't go particularly well, to be fair. We've got resistance here on the daily chart. This is the daily chart, yeah. So I put some Fibonacci lines in here. You can see I started at the top here at 1487, which was a high back in, where are we now? May of last year. So I've taken that as the high. And you can see we've got some sort of double bottom here. We bottomed out 1180 in June of last year. We bottomed out at 1182 and change in December. So I think that's a double bottom, and that's why I'm getting quite bullish about this. However, we've got quite a few hurdles to get through, and the first one today is this Fibonacci resistance at 1251, 1254 area. We're getting a little bit overbought in the short term, so I really don't see us getting through there, and I do think that will be a short-term selling opportunity. Although we've got this bullish double bottom, we are also in a significantly strong bear trend. I'm just going to throw a couple of trend lines on here as well. So, you know, there's some mixed factors there, and I think that the bear trend will dominate at the moment. I think this resistance here will dominate at the moment. I think we will have a pullback before people start getting a bit more optimistic, test the downside, and then eventually this double bottom will kick in, and we will see a resumption of the bull market, which is the dominant trend over the last decade or more. If I flick to the 4-hour chart, you can see the MACD is just starting to turn negative. We're already overbought on the slow stochastics, and we're getting a bit of a divergence there. So nothing to get too excited about, but I definitely think we will struggle anywhere near the 1251, 1254 area, and I would suggest some shorts around there. We probably want to stop ourselves out just above this high wheel. That's 1257. Maybe give it a bit more room. Maybe give it to 1258, 1259 before we stop out of that. A dip lower, well, we could get as far as 1224, but let's just see if we manage to enter that trade before we worry about targets. WTI crude, I sent an email out last night showing some very, very significant support from some longer term trend lines here. If I scrunch this up a little bit, you can see these trend lines go back to 2012 actually, summer of 2012, autumn of 2012. So these are very, very long term trend lines, at least for day trading purposes, and it did work yesterday. We had a lower of 93.20, just 10 pips below what I saw as support from the trend lines. Look how oversold we are on the daily chart, on the daily slow stochastics. MACD is still quite negative, but I'm not going to pay too much attention to that. Shorter term on the 4-hour chart, MACDs are now turning positive. Slow stochastics got very oversold, turning positive. So yeah, I am quite optimistic that we will see this rally, and I am quite optimistic that my call that we would bottom out in the 93, 40, 30 area still stands. If we get a revisit to that area, it gives us a second buying opportunity today if you did manage to get in. We're ideally looking for 94, 98 for this trade. You know, if you want to run it that far, it's not much more than 100 pips away from where we are. In fact, we will need to get through 93, 90, 93, 80 in order to attack that level, and I'd suggest maybe taking profit maybe around the 94, 80 area, just below it, in case we don't reach as far as the target. Going to finish on Nat Gas. We were talking about this yesterday in our live trading group. I've spotted this little head and shoulders pattern here. We've got a left shoulder, we've got the head, and I think we're forming a right shoulder here. Let me just put it on the daily chart, which shows that we've had a really good run up. So you know, this head and shoulders pattern is relevant after a good run up. You can see it here even on the daily chart. It's quite pronounced. So big fib support 4200. That's worked really well as expected it would this week. But if we do break below 4200, then we're going for the next target of 39.96, sort of the 4039.96 area, which would be the target for the head and shoulders pattern. And you can also see we've got a really nice trend line going back to August of last year. So that kind of backs up that level. So not only would that be good support for taking profit, but I would suggest that will also be a buying opportunity if we get down that far. But that's something for the future. In the meantime, just watch 4200 and be ready for a break. The sell-off could be quite sharp to 4,000 actually, so it could provide quite a nice quick profit, but something that's a trade that's worth running overnight, I think. What tells me I'm wrong? Well, if we start getting through 44.10, 44.20, that would mean we've broken this fib level, we've broken this trend line. Then I'm wrong, and there's every chance we'll shoot back up to the previous high around the 45.30 area, and I would be looking for a double top there, but again, we'll worry about that in the future if that happens, and we'll take that into consideration.